A lot of people ask me why network marketing companies go out of business and why some network marketing companies seem to make a lot of money. They ask me because I'm the chief financial officer of a network marketing company. Been the chief financial officer of 4 different companies, 2 of which were public companies. One was a public network marketing company, pretty profitable organization, and I've been studying the network marketing model for years. I can answer that question in large part through a discussion about the financial statements, which is something that I'm excited about. So let me show you a little bit about the economic model. And I've got a couple of things up here that you might have heard about that are references to an income statement. I call it the profit and loss statement. Network marketing companies have a tendency to have pretty significant sales, and they grow really fast, but oftentimes they shrink pretty quickly too. Those that survive are surviving because they actually know how to manage and operate their profits. Let me show you how this works. And I'm going to show you financial information from a body of public network marketing companies, because the financial information is available. It's readily available. You can look it up on a variety of websites, their own websites, in government websites in the United States, and so forth. This is all publicly available information, so nothing new, and I'm going to kind of bring it all together to help you understand the network marketing business model. Most companies have sales that represents basically their product sales and their service sales, depending on what kind of network marketing company they are. And let's call their sales 100% of the money that they get from customers, from any venue or any channel that they may be selling from. They may be selling nutritional products, they may be selling services, they may be selling travel, whatever it is. That represents 100%. The things that they sell cost them some money to buy so that they can actually sell them. Typically they'll pay for the things that they sell to their customers, to distributors, to preferred customers and so forth. They'll pay about 20% of the money that they receive goes to covering the cost of the goods that they're selling, even services as well. And so the margin that they make, or the gross profit that they make, is typically about 80%. That's a very average number for the network marketing industry, right? That 80% is what network marketing companies use to pay distributors. It's what they use to pay for their operations, their offices, their marketing expenses, their labor, their stuff, okay? In the network marketing industry, a lot of network marketing companies claim a whole variety of percentages that they pay their distributors. They're all over the place, and they use different levers, like we pay 60% of our personal volume points, or we pay 53% of our sales volume, and so forth. There's a whole bunch of different ways to talk about it. But in the end, what you want to know, particularly as a distributor and somebody who might be enrolling with a network marketing company, how much of what I generate, the sales of the company, do I get in return overall? And it's hard to measure necessarily on a person-by-person basis, but you want to understand and know how much does the company ultimately give back to the distributors that generate that revenue. The industry averages throughout the U.S. and most of the major network marketing companies around the globe varies a little bit, but it ranges it's in a range, and that range is typically somewhere in the high 30s to low 40s, but the average is probably right around 42 to 45% of the revenue that is generated is paid out in commissions. So that's pretty typical. There's some that are in the high 30s to mid 30s, 35 to 38. One of the largest companies in the world pays that range. And there are a couple who used to be in business that, that paid a little bit more than that, but we're going to talk about how they were not able to sustain that. But you'll have a one or two from every once in a while that'll pay 46 to 48%, typically. But it doesn't last very long. But those are the ranges, and so that's why I say 42 to 45 is a pretty typical range for a network marketing company in the business. And some of them that pay at that level are profitable, some are not. Now, the big concern and the big opportunity for network marketing companies rests in how they manage the business. The opportunity that network marketing companies talk about and teach really often talks about how much money you generate, how much money they make, and how much they pay out. But all of that becomes subject to the thing that's really important, and that's how they manage their business model. And that's measured on a line that we call operating expenses. This is where they pay for their rent, they pay for their offices, they pay for their marketing and things like that, as I mentioned. Most network marketing companies run in the range of about 25 to 35%. It's a big range because they're all over the place on this number, okay? But most of the companies that are doing pretty well, that are generating profits, are typically in the 23 to 25% range. However, that number can get high really fast depending on what type of promotions, what type of economic forces are at play, the recession of the 2008, 2009, 2010 played really hard against the profitability of network marketing companies because that number went up. A lot of people were spending a lot of money promoting and trying to recruit and so forth. And so that number was ranging in the 28 to 32, 33% range. And so they're dropping through a lot less because they're spending so much money trying to maintain their business model. It's a very, very expensive proposition, especially when you're getting about 80% of your revenue is available to you to pay for operations and generate profits and create payouts to the distributors. And so when you're considering and evaluating a network marketing company, you got to be really careful that you understand how much they're spending on this line, because that's where you know they're spending to take care of you, to manage their business wisely, and to protect the profits of the organization. And you want an organization that has profits because you want to be able to join an organization that has sustainability. You want that company to be around when your grandkids are inheriting your business from you. And so this is really important. What this means then is out of the 80% of profits that are being generated, typically because they're giving about 42 to 45% of it to distributors in the forms of commissions and bonuses and incentives and things, you're generating about 35% that is available to pay for operations and to give a return back to the investors or owners of the network marketing company. And of course, they're interested in making some money too. And so if the operating expenses of the company are running about here, then you know that they're going to be generating about a 10% profit. Companies that are generating those kinds of profits typically are the largest network marketing companies. They'll range anywhere from 7 to about 15%, depending on the business model. And so an organization that's generating in this range is actually a pretty decent network marketing model. Not very many people generate that kind of profitability, that kind of margin, because most of the network marketing companies have a tendency to get out of control on their operating expenses. You can think of all kinds of network marketing companies that have come and gone, especially ones that never really got big, but they got big enough that everybody paid attention to them. The bullet that killed them is right here, because they don't manage that business really well. They get out of control, they start spending a lot of their money, they spend money that they don't have, they've typically got debt that they're borrowing in order to be able to pay for the costs on this type of thing. They don't generate profits, they can't pay the debt back, they go out of business. It's a really, really rough model, and it happens over and over and over and over again because management teams have a hard time managing that line, right? Typically that thing creeps up into the 30% range, and you know they're in trouble. So you got to be really careful when you're considering an organization that's running in the high 20s to low 30s. That company is going to have a very difficult time staying in business. Profits are not low enough, they can't service their debt, and so forth. So having studied that and the companies that have gone out of business, what I'm finding is most often the companies that are struggling are typically in that range or higher. Some of the companies are private companies. You can't get that financial information. So it's hard to know where they are, but you can ask the kinds of questions that drive a management team, particularly a chief financial officer, into revealing this type of thing. You got to be able to ask that question, and he's got to be able to answer that question seriously and honestly. Now, having studied that, as the chief financial officer of the company that I work for, I've spent a lot of time trying to figure out how to create a business model that is sustainable, that is secure, that is conservative, that can maintain a cost structure to service the distributors and still create a profit for the owners. And so what we've done here at this company is we've created a different kind of business model. And we've focused on the business drivers, the things that actually generate higher levels of sales, create a deeper sense of loyalty, maintain a sense of profitability through prudent expense management, and generate a profitability that creates sustainability and security. And so this is the model that we've tried to drive here at the company that I'm working for. And let me show you how we do this. So if this represents 100% of our sales, our cost of goods, we typically try to drive products that have a little bit higher margin in them so that we have more to work with. So we're driving in the range of about 18%. So we're picking up about 82% margins in the revenue model altogether. Well, you can see that that drives through a little bit more profit to pay for expenses. We've also decided that the best way to drive a top-line revenue number to make it as high, as secure, and as strong as possible is to increase the payout to distributors. We pay actually 50% of our sales dollars, not points. The point value is significantly higher, but the point value is basically irrelevant to us because we want to ensure that we're always paying out the most to distributors because we know that that will drive loyalty and commitment and drive a much higher top line. And so we commit ourselves to make sure that we're paying 50%. And for the last couple of years that we've been doing this, we've been paying 50% consistently on a week-by-week basis. Now, that gets us to the critical operating measure, and that's our operating expenses. Even at startup in the company that we have started, we've been running in the low 20s, 22 to 23% at startup. We've now gotten into a more stabilized model that we've been in business for a little over 2 years, and we're running in the range of about 19 to 21%. And that's where we want to be. I think that the stabilized model in another year or two, once we've gotten to the point where we're past all the startup market openings, aggressive product introductions, and messaging and marketing and so forth, and we can get to a more stabilized, consistent pattern of operational expenses, we'll be in the range of 17 to 19%. Okay? So if we've got 32% that is dropping through after the commissions have been paid and the bonuses and the incentives, then I can drive a model that's putting through in the range of 15 to 13 to 15% on a consistent basis with an opportunity to grow it as the top line grows. So that number can actually start begging towards 20%, because if I'm still staying at 50, I've got an increase in revenue and my operating expenses start dropping because they're mostly fixed costs, I can generate higher profits. Now, question would be asked is, well, if you're generating profits, then you're getting all the money. Well, at this company, we also have decided that in order to drive stability and to drive that top line, we figured that if we could drop through more by managing the business better than anybody else in the world does, and by dropping through additional profits, we came up with the crazy idea that if we shared our profits with our distributors, that would create further sustainability, further loyalty, further growth, and further opportunity, particularly for the people who are building. And so we decided to take a portion of our profits and drive it back into our distributors' pockets, increasing that amount of the payout, further incentivizing us to manage this model efficiently and generating even higher profits, which then feeds on itself. So we created a model that continually reinforces growing the business. We think that that's a long-term strategy. We think it's a strategy for profitability. We think it's a strategy for sustainability. We think it's a strategy of prudence, of conservatism, and managing the business really, really carefully. The key here is that, is there a management team that can actually drive an efficient model that can drop profits, give them back to the distributors, drive the kinds of payouts that keep distributors loyal, which sustains the top line, which then feeds on itself again. That's what we want to do. That's what we're about doing. So what we're trying to accomplish here is to create this, as I said, this model that has this self-sustaining design to it. And we think that it'll be a powerful example in the network marketing industry. We think it'll be influential. We think that the model makes sense, and we think that it's what a lot of companies have been trying to strive for, but have just gotten into a rut of trying to manage down their commission and incentive lines, because Wall Street's forcing them to do that, the investors are forcing them to drive greater profits, and the way that they get to those profits easy, and probably most easily, is by pushing down the commission payments, because they can play with the compensation plan. Playing with the compensation plan, in my opinion, is really a revenue killer, because what it does is it disenfranchises the distributorship. And so if you can commit to maintaining a level of payout that keeps the distributor base excited and motivated, loyal, and committed to it, I think it's an investment in the top line. A lot of companies, in order to drive through profits to the bottom line, will play with this. I'm familiar with a few who even recently have pushed that incentive line, and you can look at it in the financials of the companies, have pushed it down to the 41% level. Obviously they're picking up some profits down there, and what are they doing with those profits? Well, they're actually just draining them through to the ownership and not typically driving them back into the business. And especially if they're creating an infrastructure and an employee base, an office base, a promotion base, a marketing team, a number of overhead costs that have just blossomed and grown. It's funny how companies develop and grow and incur additional costs, and it's kind of easy to get that, and it's kind of easy to build that cost structure. It's almost impossible to get rid of, because you make commitments, you've got leases, we have a hard time terminating people, all of which I understand, but you got to be careful about what commitments you get into, because you know that if you have to get out of them, if you have a downturn in your top line, then it's hard to get out of those. So you got to be really careful about going into them. And so you got to watch companies that are starting to drive down the commission percentages on a percentage of sales, because what they're doing is they're pushing on the backs of the distributors the burden of maintaining profits for the company. That shouldn't be the case. We should actually be protecting that right, protecting that benefit, protecting that compensation, so that that will drive the top line. It always happens that way. You motivate the people to sell, they sell. You take away those motivations, they stop selling. And so if you're going to stop selling and your revenue line is depressed, you have to either take it away from them, or you have to minimize your overhead costs. So if you can manage this line and still motivate your distributors, you've got a sustainable model. Now, the company that we've designed to drive this business model is called RX. I've been the Chief Financial Officer of RX since it was founded. I'm one of the founders. Having studied network marketing companies in the public space and in the private space, the objective was to create a model that could drive distributor commitment and drive profitability, but you have to do that with an experienced team that can manage the line that is typically killing network marketing companies. I can give you dozens of network marketing companies, some of which we've actually assimilated, whose expense lines just grew out of control. And when the revenue line got pushed down, they couldn't get out of it fast enough to maintain the profitability, and the profitability of the company died. I've seen companies who have got profitability, but they get really excited about their profitability and they forget who drives that profitability for them, i.e. the distributors. And so they start taking it away from them, and they start pushing the averages here down until they're in the high 30s and low 40s. Why? ownership pushes them there, they have a hard time generating enough profits because this line has gotten too big, whatever it is. But for us, the objective is to maintain a cost structure that is low enough that even if revenue pressures hit, we can still maintain an incentive line that gives people motivation to keep driving and pushing really, really hard. We think that this model is the one that the distributors have been begging for. We believe that it's a model that they deserve, and we're committed with the management team that we've assembled, which is very good at it. They've been running network marketing companies and have been running profitable network marketing companies, know how to do that. And we can generate profits sufficient for the investors, for the owners of the company, still drive some of those profits back into the distributor model, as well as maintaining highest payouts in the industry and drive a top line. We're poised for growth. And so far in the first 2 years that we've been in business, it's done just that. It's growing like crazy. Very excited about it. As evidence to the efficiency and the capability of this business model that we've been driving here, the first year that we opened up and went into business, in the first 12 months, we generated over $20 million in revenue and just about covered our ultimate startup costs, which are pretty significant. In our first full year of operations, we generated over $32 million in sales. We paid out 50% commissions, and we came very close to break even. This year, in our second year, we're headed to about a 50% growth rate, and we've already generated profits. Profits that we're actually funneling back into the business. We're operating profitably every single month. And so really for us, it's just proof positive that the model makes sense. The distributors are very excited about it. They're excited about the opportunity in it. They're driving revenue growth that's pretty substantial, probably one of the most significant network marketing starts in the history of the industry, and we're doing it at a profitable pace. So we're excited about that it's working. We think it's going to be an industry game changer, and we're proud that we think it really drives distributor loyalty and opportunity and creates an opportunity for people all over the world to do what they really love to do, and that's help people get healthy and live better lives.